Hello fellow traders and welcome back. Today I'll explain what the MACD indicator is, how to use it, and a simpler way to view and use the MACD indicator. Okay, let's begin. The MACD comprises of three components: the MACD line, the signal line, and the histogram. The MACD line is calculated by using a stocks or trading pair closing prices and subtracting one from the other. Typically, it's the 12-period EMA minus the 26-period EMA. The MACD line bounces up and down the zero line and shows us the trend of the price. The signal line is just a 9-period EMA of the MACD line itself. Think of it as a smoother, calmer version of the MACD line. It lags a little behind, and that's on purpose. It helps us confirm when the momentum might be shifting. Next is the histogram. It's the difference between the MACD line and the signal line. This also conveys the strength of the trend. The MACD line is represented as the edges or rims of the histogram. When the MACD line is above the signal line, prices tends to move up, and down for the opposite. Let's bring up the MACD on the chart. Remember, the MACD is represented by the edges of the histogram. When it moves above the signal line represented by the red line, prices should move up and down if it goes below. Also, if the MACD crosses above the zero line, prices will go up and vice versa. The most popular signal is the crossover. When the MACD line crosses above the signal line, that's often a buy signal. It's like the market saying, hey, the upward momentum is kicking in. On the flip side, when the MACD line crosses below the signal line, it's a potential sell signal, hinting that the momentum's turning downward. The histogram also gives us some extra info. If those bars are growing taller, it means the momentum is getting stronger in whichever direction the trend is going. But if the bars start shrinking, it could mean the trend's losing steam. Maybe a reversal's on the horizon, but it can also fake us out, and that's called a divergence. That's when the MACD line moves in one direction, but prices stays flat or moves in the opposite direction. Let's take a look at the chart. Starting from the left, we see the MACD line moving above the signal line and the zero line, and prices also moves up. Now we see the MACD line move below the signal line, but let's look at the prices. Prices seems flat and even pushing upwards. That's a divergence. In this example, the MACD comes down even below the zero line, then it pushes above the zero and signal line again to push the price up. And here, again a divergence, and it does the same thing. Now, if we were to rely on that signal and looking up and down at the MACD and prices and shorted or entered a sell order here, we would surely lose money. When live trading with real money, human senses tends to get overwhelmed with too much data, over-analyzing, and thinking too much. Not to mention the doubt and uncertainty of your decision. The MACD is my favorite indicator and one of the most popular indicators, which can make you very profitable. That is if you are well trained in many techniques in trading, which can take quite a bit of time to get there. Let me show you how I simplified the MACD indicator. Now I'm going to install another indicator that transforms the MACD signals into easy to understand representations. As you can see, there are no more up or down candle colors to overwhelm your visual senses on the chart. It is replaced by colors of the MACD condition. In this default, blue represents the MACD above the zero line and yellow for below the zero line. The default settings are great for trend riders that hold for long periods to ride the trend and maximize profits. Let's switch settings to the popular crossover signal and compare it to the MACD below. Now look at the first divergence we found on the MACD below and look at the price on the chart. You can tell just by looking at the chart that there is a divergence. Candles turned yellow but prices do not drop. This is very easy to understand and digest visually. Let's look at the second divergence and compare it with the MACD below. Which one do you think would make you make the right choice? Okay, next I'm going to show you a super accurate MACD setup that can make you very profitable even for high-risk takers. This setup requires you to look at the MACD indicator in multi-time frames, M5, M15, H1, and H4, then add the 200 moving average line in all time frames. By default, the MACD settings will be set to MACD versus the zero line. The setup for the perfect entry here is to have at least 3 time frames with concurrent signals. Before we move on, we need to change the settings for the higher time frames. The signals on the higher time frames will be much slower than the lower time frames. Change the H1 and H for settings to MACD versus signal line. Watch the candle color change in the H1 time frame. Now, the signals are matching up to the lower time frames. Do the same for the H4. Okay, now we have confluences between the time frames. As you can see, if we entered orders with the same candle colors on M5, M15, and H1, we have high probability chances. But be careful and look out for the divergences we saw earlier. This setup is for scalpers. Okay, look at the yellow candles. We have confluences in all time frames. Although against good practice and against the main trend, people with high-risk appetite can enter a short scalp here just by using the MACD signals with confidence, but it is better to trade with the trend. Now remember, this setup is for scalpers. For trend riders, just keep all the settings on default. For people who want faster signals to catch the turn faster, but a bit higher risk, here's how you adjust the settings. Change the periods to half the default settings. So EMA 12 becomes 6, 26 becomes 13, and 9 becomes 4. And look at the chart comparison. You'll get the signals to 2-3 candles faster than the default settings. Here's a pro tip to spot divergences quickly. If the candle color changes and the next candle's price stays flat or goes the opposite direction of the signal color, then there's a high probability the following candles will create a divergence. Guys, I made this indicator with intentions to make using the MACD easier and more accurate. I hope you like what I've created. You can try out this indicator for free by going to my website at ultimatetipster.com. Then sign up as a member and you get all of my present and future indicators and EAs to try out for free, including our popular super tool. Once you log in, the files will be available for you to try out on a demo account. If you like this kind of material, please consider subscribing to my tiny channel. Thanks, and see you next time.